The American dream has always rested on the solid foundation of homeownership. That quaint vision of a cozy house with a white picket fence represented stability, roots in a community, and the ability to build equity over time. But as climate change accelerates, the very concept of homeownership is being shaken to its core across vast swaths of the country. In recent months, I've experienced this storm firsthand. My insurance company decided to raise the yearly premiums on our humble Brooklyn townhome by over 50% across just 3 years. Their justification? A new reassessment that hypothetically doubled the rebuilding costs, an estimate so wildly inflated it surpassed the home's actual market value. When I pushed back through the proper channels, my inquiries were met with deafening silence. So I cast about, searching for alternative coverage less detached from reality. What I found instead was a homeowner's insurance market of Kafkaesque opacity and irrationality. The luxury policies seemed to inhabit a parallel universe, offering platinum-plated coverage far exceeding our needs at prices only possible for the 0.1%. The budget options were equally untethered, frequently capping potential payouts at a fraction of realistic rebuilding costs. We could have insured little more than the vacant land beneath our limestone abode. Economically indefensible, both paths represented unpalatable options. Yet those were the only choices left. And so we bought an ultra-cheap policy, stockpiled fire extinguishers, and resigned ourselves to the possibility of someday having to liquidate the lot and retreat inland if the unthinkable occurred. How did the sacred financial instrument of homeowners insurance become so dysfunctional and divorced from purpose? Our real estate agent could only shrug and recount tales of vast pricing discrepancies between identical neighboring properties. Don't bother complaining to state regulators, she warned, they're too terrified of scaring the herd and creating an uninsurable market mirroring today's Florida wasteland. In this new climate-addled world, the algorithms have broken down. The old models of pooling small premiums to insure against statistically infrequent events are sputtering. With risks rising across previously stable regions like the tri-state area, the losses are starting to outweigh the resources set aside. Perhaps most damningly, as I learned by escalating to the hallowed Lloyds of London marketplace, the very institutions governing society's shared risks, insurers, banks, governments, have failed to align. While the planet transforms under our feet, the housing finance system plows blindly ahead, operating via the same obsolete risk calculus. It's not built for the volatility and frequency we now face. The model for insurance hasn't changed, Lloyd's CEO John Neal informed me plainly, while climate is changing. The consequences will be profound if we don't get ahead of this unraveling. Homeownership is the primordial bedrock underpinning consumer confidence, personal balance sheets, local economies, and tax bases. How many towns will become hollowed-out shells when residents flee en masse because insurance rates spiked to $50,000 per year? And the timing couldn't be more wretched, as we face the nexus of a housing supply crunch, soaring interest rates, lingering inflation, and now skyrocketing insurance costs. For millions, homeownership was already an increasingly exclusive club. This crisis solidifies its transformation into a rarefied luxury product affordable to only a few. Some solutions are clear if we can somehow overcome institutional inertia and political constipation. Insurers must embrace technology like in-home sensors and aerial imaging to price risk with precision rather than using blunt proxies like flood zones. Banks could contribute by requiring more climate-resilient construction as a condition of mortgages in vulnerable areas. And government must resolve the free rider problem plaguing the system. Right now, densely populated coastal areas are quietly subsidized by interior premiums disconnected from climate realities. Moving forward, exposed regions must foot more of the true preventative costs, whether through higher localized taxes funding seawalls and drainage projects, or risk-adjusted insurance rate structures incentivizing resilience. These are heavy lifts, requiring unprecedented coordination between public and private spheres. But the painful status quo is already untenable. Do we want a future where homeownership is exclusively for the uber-wealthy rental tycoons orchestrating a neo-feudal scheme of perpetual renter lives? Where your American dream is reduced to serf-level status, beholden to corporate lords systematically stripping equity from future generations? We've arrived at a crossroads moment, threatening America's core middle-class identity. Saving that coveted home with the white picket fence requires all hands on deck and a concerted rewiring before it's too late. The house may already be on fire, but it's not too late to become the fire department.